could be here, but also to give you a little idea on the flow that we typically go over here on Thursdays. We first start to take a look at what's going on in the market. Then we dive into our topic of discussion. And then as always, we save the fan favorite towards the very end, where we'll show you how to analyze any stock that you're interested in less than 10 seconds. So if you're somebody who wants to see your stocks analyzed, make sure to stick around towards the very end. And as always, if you haven't already, smash that like button, share this with all your friends, share this with all your family. If you're over on our YouTube page, don't forget to subscribe if you're not already subscribed. If you're over on our Facebook page, make sure to like the VectorVest Facebook page. Doesn't cost you anything. All that helps me out though. Awesome. So just waiting, making sure. Good morning, Wahid, Dale, Jay, Drew. Hopefully you guys are all doing well. Glad you guys could be here bright and early. Hopefully, from what I heard, our Jockey Club members that are out there, Steve was saying that you guys had a pretty good Jockey Club. So glad to hear that. All right. Loud and clear. Awesome. Thank you for that, Dia. Okay, so with that, let's go ahead. Jump right into what's going on in the market here today. Then we'll move into our topic of discussion, which is something that I get asked almost weekly here, and that is about the DEW timing system, which we'll discuss in more detail in just a little bit. So first and foremost, let's see what's going on right now. Right now, we have the market needle 3 ticks into the yellow, therefore the market is neutral, and VectorVest does not advocate buying any stocks at this time. If we scroll down a little bit, we get to the color guard where we see those 3 yellow lights. We can see the price is moving lower day over day, and also week over week at this point. But because it was green 5 trading days earlier, obviously we can't go from green to red over a 5-day basis. So therefore, we're going to stay in that yellow range for today. Looking at the RT, it's flat week over week, but higher day over day, surprisingly enough, but still remains below 1. So therefore, we're going to have a yellow light with that one. And then the buy to sell ratio, which is looking at the overall health of the market, tends to look at the number of buy rated stocks and compares it to the number of sell rated stocks. As we can see, it is below 1 right now, telling us that there are more sell rated stocks in a database than buy rated stocks in a database, or that there's overall market weakness. So therefore, that's where our 3 yellow lights come from. Excuse me for that. And then looking at the MTI, we can see it's flat day over day, but actually lower on a week over week basis. The MTI is looking at the underlying trend of the market. It's cast on a scale of 0 to 2. So above 1, the underlying trend of the market is still up, as we can see now, but it is getting softly weak, or it is getting a little bit weaker on a week to week basis here. After the MTI, we then get into the trend column, which shows 2 parts of the trend each and every day. The first part is looking at the primary wave, or simply the weekly trend of the market. As we can see, it's down since the price of the VectorVest composite is lower than it was 5 trading days earlier. The second part is looking at the underlying trend, or the MTI. So since the MTI is above 1, the second part of that trend column still remains in that up situation. And then last but not least, we get the calls column, which stands for our confirmed calls. As we talked about last week, we did get that confirmed up call as of last Thursday, and we remain in that confirmed up situation as of today. Now, the confirmed call is the most conservative timing system here at VectorVest, and it's our last signal we get to get into the market and our last signal we get to get out. So therefore, we never want to ignore a confirmed call change. Hey, Glenn, what are you doing here? I thought you were on vacation. Hopefully you're doing well. Hopefully your vacation's going well. Hope everything is nice out there at the beaches. Let's see. Good morning, Michael. So Michael, if you want to see your stocks analyzed, make sure to stick around towards the very end. I'll analyze any stock that you guys want to take a look at in less than 10 seconds at the very end though. Good morning, Mark. Hopefully you're doing well. All right. So with that, we take a look, last but not least, at the advanced declines. Every single week we like to look at this, and we like to see how many stocks are moving higher and how many stocks are moving lower. And when we look at it, we want to see a 2-to-1 bias typically. So if the market's moving higher, we want to see twice as many stocks advancing than declining. And if the market's moving lower, we want to see twice as many stocks declining than advancing. So right now we're sitting at about 58% of stocks moving higher and about 30% of stocks moving lower. A little bit less than that 2-to-1 bias, but we'll take a look at it at the very end and see if that changes after our session here. Looking at the major indices, the Dow is up about 0.3%, NASDAQ's up about 0.4%, S&P's up about 0.2%. Overall, the VectorVest composite up about 0.5% for the day. Raining at the beach. Oh man. Well, hey, it's not raining here for right now. I think it's going to be raining here in a little bit, but luckily we're staying dry for the time being here. All right. So with that, we know what's going on in the market. Right now, we are in a neutral situation. We're lower on a week over week basis. And so therefore, we definitely want to be cautious. We don't have a 2-to-1 bias. So if we're looking to be purchasing anything today, we would simply be sitting on our hands waiting for more confirmation of a certain directional move before jumping into any new stocks. Okay, so with that being said, the DEW timing system is a very technical timing system here at VectorVest. It's one of my personal favorites to use, and that's because it's more of a short-term swing trader timing system. Now, in the VectorVest 7 platform, you can put the layout automatically right there for yourself, and you can get the up and down arrows to show that. On the mobile app, it's a little bit different. The mobile app, you can still look at the DEW timing signal or system, and if you know how to read it, you can utilize that no matter where you're at on the go. So let's go ahead and pull up the VectorVest composite graph. Oh, let me go back here. I'll just put it in right here. I always get this internet error every time during the live session. I always get the internet error. Don't know why that happens. I'm gonna have to look into that though. Okay, so getting back here, typing in the VVC for the VectorVest composite, going to the graph, and now the default, as always, you can change it from whatever you want. And what we're gonna do is we're gonna customize this together here, so that way you can see exactly how to build the DEW timing system on your own, on your mobile device as well. So what we're gonna do is we're gonna go to the graph settings in the upper left, and we're going to come down here for the envelopes, and we're gonna just keep it at the base or the basics here. And then for the moving average, we're gonna take off one of them, put the other one to a 30-day weighted moving average. There we go. And then last but not least, we're gonna come down to the lower indicator and put on the DPO or the detrended price oscillator. So here we go. Let's go ahead and zoom out to a 6-month. And now the DEW stands for, the D for the DEW stands for the DPO or the detrended price oscillator. Essentially, it's a momentum indicator, and it's cast on this, or it has a scaling, 0 being the neutral. Above 0 tells us we're in an uptrend. Below 0, we're in a downtrend. And the higher it is above 0, the stronger the uptrend. Below 0, the stronger the downtrend. Then you also get the 30-day weighted moving average, which is where the W comes from the DEW. And then the E for the DEW stands for the envelopes, which you can see here. Now, when looking at the DEW, there's 2 key things that have to happen to get an up signal and 2 key things to get a down signal. So to get an up signal, first and foremost, we'll start off with that. You have to have the price of the VectorVest composite crossing above that 30-day weighted moving average or being above that 30-day weighted moving average. And you also have to have the DPO in positive territory. If both of those rules are met, we'll be in a DEW up situation. Now, if the price crosses below that 30-day weighted moving average and the DPO goes into negative territory, that's how you would see that DEW down signal. The reason why we have the envelopes on here is to show extremes in price. Envelopes are a great tool, but that can be used for, identifying when you have market extremes or, grossly overbought markets or grossly oversold markets. And we utilize the envelopes on here by looking at it. And if the price ever closes above, let's say, the upper envelope, then it would only require one of the 2 conditions to be met to get a down signal. So for example, as we mentioned, to get an up signal, you have to have the price above the 30-day weighted moving average, and you have to have the DPO in positive territory. But if we break that upper envelope and we close above that, and let's say the price started falling hard back down and we saw the DPO go into negative territory first and foremost, then that's all it would take. Even if price hasn't crossed below that 30-day weighted moving average, that's all it would take to get that DEW down signal. So that's where the envelopes come into play, and that's why we add them on here. Typically, you're not going to see that happen too often. It's a very rare occurrence. And actually, I can only think of one time in my 10 and a half, almost 11 years of being here at VectorVest that I've ever actually seen that rule take effect. And let's go ahead, we'll go zoom out. We're going to have to zoom out a little bit more here. Let's go to a 5-year. And what we're looking for, we'll zoom in. And this time right here, basically right after that correction we had in February going into March, right after the COVID crash, if you will. Uh-oh. Hey, appreciate that, Frank. Thank you for that. Never had that before, so that's the very first time I heard that sound. Had no idea what it meant, but thank you for that, Frank. I definitely appreciate that. So what we're looking for here is when looking at the DEW, you had the price breaking below the 2 envelopes. So therefore, it only would require either the price to go above the 30-day weighted moving average or the DPO to cross into positive territory to get that up signal. You don't have to wait for both rules at that point. This is the only time I've ever seen the envelopes actually come into effect, and that's why I wanted to point it out here for you guys out there. So as we can clearly see, we broke down below back in March right after the COVID crash, and then all we had to wait for is the price going above the 30-day weighted moving average, which happened here. Which happened right here. As you can see, the DEW or the DPO is still in negative territory. So therefore, instead of waiting that few extra days, that was the entry point based off of the DEW and using that rare but useful rule of the envelopes. Let's see. Steven has a question. Is there any way to see the DEW up or down signal like on the desktop, or do we have to use the graph? So Steven, right now, you don't have the arrows in the mobile app, just like you would with the desktop. So, but one of the common questions I get from people every single week is, how do I see the DEW on the mobile app? Now, you're not going to see those red and green arrows like you do at the desktop, but that's why we're covering the rules and going over it today, because if you know those rules and you know how to read the DEW timing signals, you don't need those green or red arrows to confirm that. As long as you can see the graph, you can get that same information. Brian's asking, any plans for Watchdog to alert on DPO indicators? Brian, I haven't played a lot or played along or a lot with the Watchdog recently. I believe you can by using the search for DPOs or the DPO crossover search. But you know, if you want to give our support a call, they can walk you through that and show you how to set that up. But you should be able to do that, or maybe I'm thinking of the Super Watchdog. I'm not quite sure. It's been a while since I've looked at which is which. But I know there is ways that you can get alerts on stocks crossing above that DPO indicator there. All right, so going into it though, that was the only time in my 11 years almost of being here at VectorVest that I've ever seen that exception to the rules come into play. You know, we've had the 2016 crash or 2016 sell-off. We've had a lot of crazy markets over that 10 and a half, 11 years. And this is the only time I've ever seen that exception actually be utilized here. And as you know, that was a great time to really utilize it, because if we look at what happened in the market after that, got in there, and then look at what the market's done ever since. Just go up, 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 and up. And yeah, that's where the DPO or the DEW system definitely comes in handy. So if we go back to the 1 year, let's make sure we're not in weekly graphs. Okay, we're still in daily candles. There we go. And looking at it here, you can see it gives you great opportunities to take advantage of these nice runs like here. Kept you in, you got out here, took some profits just to make sure. And then all of a sudden you had a little bit of an uptick, pulled back down, and then caught this nice run here, caught these runs here. And now starting to see where you can capture these quick moves to take advantage of blast offs or nice swing trade opportunities or good markets to swing trade in essentially. Now, this can also be used. One of the other reasons why I like this DEW timing system so much here is because not only can it tell you when to be long in the market for you swing traders out there, but also if you short stocks, it can also tell you when to take advantage of the big downturns. Obviously in a bull market, you know, taking advantage or trying to sell stocks in a down market or in a bull market, a long-term bull market is very, very hard, or, you know, you have to be nimble with your entries and exits. But overall, we start to see that we're going from a bull market case scenario to a bear market case scenario, then utilizing the DEW for the down signals can definitely be a benefit to you as well. Let me make sure I'm all caught up. Awesome. So yeah, should be good. You're welcome, Steven. So one of the other things that if you are a VectorVest subscriber and you watch the weekly special presentations that we do, especially the daily color guard report, one of the things that we talk about with the DEW when we cover that every single night for you is the enhanced Pro Trader timing, or the enhanced DEW. All the enhanced DEW gives you is that extra insight of the MACD. Now, the MACD stands for the moving average convergence divergence, and it's a great indicator to use, but it's not incorporated with the official DEW signals. So all we have to do if we want to see that enhanced layout is switch the bottom graph from the DPO to the MACD and go back. And now looking at the MACD can be used for both short-term trades and long-term trades. I've talked about this in the past, but as we can see, we've definitely grown a lot since that point, and we have a lot of new people here. So let's just cover that together once again. So from a short-term perspective, looking at the DEW, let's go zoom in to a 6-month time frame. And when looking at the DEW, what you're looking for is the crossovers between the MACD line, which is that light blue line, and the signal line, which is the black line there. When that blue line or the MACD line crosses above the signal line on a short-term basis, that is a nice uptrend to take advantage of for swing traders out there. Now, for a longer-term perspective, zoom out. Let's go to 1 year now. What you're looking for with the MACD from a long-term perspective is when the MACD line and the signal line cross above that level of 0, or as long as they're above that level of 0, you have a long-term bull market or a long-term opportunity to buy and hold. And if the MACD crosses below that level of 0, then that would be your long-term exit signal or indicator that tells you the longer-term trend in the market is now moving lower. Let's see. Would you say MACD is more of a confirmation indicator to avoid whipsaws? It can be used as that, Brian. Especially because you're only looking at, a moving average, a DPO, so 2 indicators. The envelopes typically don't come into play that often, as we've talked about just a few moments ago. So having 2 indicators, you could add a third, which is the MACD, as your tiebreaker essentially. So yeah, you could say MACD is that confirmation indicator to avoid whipsaws, or to help you gain some added insight on what's going on, or looking at it from a longer term or a short term perspective as well. So yeah, MACD, is very, very useful, which is why we wanted to talk about it here. So if you guys have any other questions about any of these indicators, feel free to let me know in the comments, let me know in the chat. If you haven't already smashed that like button, go ahead and do it no matter which platform you're on. But let's get in and look at MACD as well from a longer term perspective here. We see that level of 0 at the very bottom, and over the last year, the MACD has stayed in positive territory. I think we can all agree, the markets have been steadily rising over the last year. We've been in a long-term bull market. We've been in a nice long uptrend, and the MACD is confirming that. Now, from a shorter term perspective, you do see some whipsaws with the MACD and the signal line, which could indicate opportunities on a short-term basis for you day traders or swing traders out there to either hedge or protect some of your profits. But from a longer-term perspective, which is what we're looking at with that MACD, it definitely gives us an idea that, hey, we have this nice long uptrend. If we see some crossovers or some temporary pullbacks, we'll definitely pay attention to them, but maybe we'll just tighten our stops rather than completely closing out of our positions and potentially, losing out on some opportunity there. When will you be able to add more than one indicator? The mobile, volume, and MACD. So Matt, I don't have any exact timeline for that. That is actually something that has never really been requested too much. Obviously, just because if you're on a mobile device, let's say like your phone, either Samsung or an iPhone, you're going to run out of space to be able to see it. Even with like TD Ameritrade, who I have, my broker or one of my brokerage accounts with, and I use Thinkorswim, with that, if you add more than one indicator, you have to scroll down, then you can't see the price, and it's kind of clunky, to be completely honest. So being able to just keep one indicator at a time on the bottom, in my opinion, from a user experience standpoint, or from, a visual standpoint, seems to be a little bit more streamlined and a little bit more usable. So hopefully that answers your question. I could definitely add that to our list. As always, the feedback I get from you guys every single week here about things you want to see or new features you guys want to have added, I compile a list of that every single week. The list just keeps on growing, and that actually goes to our development team. I bring it to them periodically and discuss what it is that our users want to have in the app that they don't have access to right now, to help make sure that the app is the most encompassing trading app that anybody would ever need. So yeah, I will definitely add that to our list, but hopefully that explanation answers that question. If you have a better reasoning for it, obviously the more information I can get, the better, for when I take it to them and explain why you guys would want to see that. So hopefully that helps. So, okay. You're welcome. All right. So that is it for the question, or that is it for the DEW. The DEW, once again, is one of my favorite timing signals here at VectorVest. It's great for short-term swing traders, really looking for momentum and looking at when there's strong momentum in the markets on a short-term basis to take advantage of some of the best stocks out there, which, we talk a lot about how to find those kind of stocks. So if you guys have questions about this, as always, feel free to either ask me in the comments, or if you're watching this on a replay, you can always give our support a call, and they'd be glad to help you get this set up as well. That's what they're there for. They're very knowledgeable. Granted, we do get a lot of calls here for help. And so, our support is working hard. Sometimes it is a little bit longer to get a hold of them, but they are there to help you. And if you just give them a second to get there, and they will spend as much time as they need to make sure that you have a clear understanding of what you're getting and how to really utilize it to, improve your own investing or your own trading. Thanks for that, Drew. All right. So with that, I started seeing some people putting in some stocks that they want to take a look at. So without further ado, let's go ahead and start to analyze your guys' stocks. If you guys have stocks that you want to see analyzed, let me know in the comments or the chat, and we'll go ahead and I'll try to get to as many as I possibly can to analyze them for you and show you how effective and how quickly VectorVest can make analyzing any stock out there. So we're going to get out of the graphs. We're going to go to the magnifying glass in the upper right-hand corner. And the first and foremost comes from Michael. We're going to do DSX. Let's go ahead here. Diana Shipping. Man, I haven't heard that name in quite a while. All right, so this one has great... Well, actually, before we jump into the analysis, let's take our time with the very first one, and then we'll move on from there. So the very first indicator we look at is the RV, or relative value. The relative value is looking at the long-term potential of the stock over the next 1 to 3 years. Like all four of these indicators, it's cast on a scale of 0 to 2. So above 1 is favorable, below 1 is unfavorable. So at 1.49, that tells us this stock has great long-term potential. The next indicator is the RS, or relative safety, and this is the risk factor essentially. Above 1 tells us it has less risk, below 1 tells us it has more risk. So at 0.89, this stock has more risk than the average stock out there. Then we look at the RT, or relative timing, which is looking at the short-term price trend of the stock. And it's not just telling you whether the stock's in an uptrend or a downtrend, but also identifying the magnitude of that move as well. So above 1 tells us the stock is in an uptrend. Because it's on a scaling of 0 to 2, the closer to 2 it is, the stronger the uptrend. If it's below 1, that shows it's in a downtrend. Obviously, just inverse. Closer to 0 it is, the stronger the downtrend. So at 1.68, that tells us this stock is in a pretty strong uptrend right now. So these three are combined to come up with the VST, standing for value, safety, and timing. A great overall picture of the stock from both a fundamental and a technical basis. And therefore, at 1.41 tells us this stock is favorable overall. All right, so now that we know that, we'll take a look at the next one and see exactly how fast this can make it once you get comfortable with understanding these indicators. To quickly answer Steven's question, Xtroff, are you still bullish as a hold? Yes, I am. I'm still holding on to it. Haven't changed anything. Actually, with the most recent sell-offs, I've been considering actually adding to that. Lower or buying more shares, especially for how cheap it is. If it hits that $2 price range, I'm getting quite interested in loading up a little more into my positions. So hopefully that answers your question there. All right. Do you use different MACD settings for swing trading compared to long term? So Bob, personally, I used to. I used to use, the 8 and 17, I believe it is. I forget the exact numbers. I have them saved in one of my layouts. But, recently I've started, I haven't really done the real short-term swing trading or day trading almost for a few weeks. And therefore, I don't really utilize those settings as much as I used to. But yes, there are settings that you could use to speed up that MACD to help you get quicker entries and exits if that's the type of trading you're looking for. All right, so let's get back into it. We did DSX, MRVL is the next one. MRVL. So MRVL, good long-term potential, less risk associated with this stock. You have a steady uptrend, so overall the stock's favorable. That's as hard as we need to make it, folks. If you're spending more time than that and trying to break down the balance sheets and all that, you're doing it wrong. Let me just tell you right now. From somebody who's been investing for almost 30 years, you're doing it wrong if you're spending more than 5 to 10 seconds analyzing a stock. All right, let's see. Going back over here. I know I missed one. WYNN, WYNN. There we go. So WYNN has poor long-term potential, a lot of risk associated with it. You're basically moving sideways right now on a short-term basis. Therefore, the stock is not favorable. CRSR. CRSR, good long-term potential, but does have a little bit more risk associated with it. More of an aggressive play here. Right now, the trend is not your friend. It is moving slightly lower. The stock is favorable, but you need to see that timing pick up. Let's see. FANG. So FANG. There we go. Good long-term potential, less risk associated with it. So solid fundamentals, a prudent play. However, timing is below 1, telling us it is in a steady decline on a short-term basis. It's a good stock, but you need to keep an eye on that timing. Let's see. METC. METC, good long-term potential. A little bit more risk associated with it though, so an aggressive play. However, look at that timing, 2.0, can't go higher than that. You're basically, on a rocket right now. You're shooting off, moving higher. Overall, it's a good stock, aggressive play, momentum play. I like it. If you're a momentum trader, this is a great trade. Just keep your eyes on the technicals there. Hopefully what we've talked about here today will help you with those technicals to time your entries and exits a little bit more precisely and help you maximize your gains or your returns. Snap, SNAP. So Snap has poor long-term potential, does have a little bit more risk than the average stock out there. However, you are in a slight uptrend or a steady uptrend right now. Overall, the stock's about average. Let's go see FLGT. FLGT, great long-term potential, less risk associated with it. However, the timing at 0.88 tells us it is in a steady decline currently. Therefore, it's a good stock, just not the right time to be in it, or to be long in it at least. VALE. VALE, good long-term potential, a little bit more risk than the average stock out there. You're in a steady decline. Overall, the stock is a good stock with that good long-term potential, but timing is of the essence. Timing becomes the most important factor. Once you actually own a stock or you buy the stock, timing becomes the most important factor to be aware of. And with timing at 0.67, that does tell us it is in a steady decline. Therefore, we shouldn't be long in it right now. Let's see. JCI. JCI, good long-term potential, less risk associated with it. You're in a steady uptrend, so overall, stock's definitely favorable here. ISWH. So average long-term potential does have a lot of risk associated with it. $1.61, no wonder it has a lot of risk associated with it. It's in a really strong short-term uptrend, however, so therefore it's favorable. that uptrend, the strength in that uptrend is offsetting the amount of risk involved. So if you're a short-term or speculative trader, momentum trader, this could definitely be a viable opportunity for you. Let's go ahead, scroll down a little bit. Good morning, Jeff. Hopefully you're doing well. ASO. All right, looking at ASO. Good long-term potential. Does have a little bit more risk associated with it. You're in a steady uptrend on a short-term basis. Overall, stock is favorable. I definitely keep an eye on that timing, though, to say the least. All right, let's see. PKI. PKI has good long-term, great long-term potential, actually. Solid fundamentals, a nice, strong, steady short-term uptrend. So therefore, obviously, this stock's going to be favorable right now. ARKK. So this is going to be an ETF for anybody not familiar with it. The Cathie Woods ETF, the ARK fund. With an ETF, the RV and RS are always going to be pegged at 1. Because the RV and RS are analyzing the balance sheet, the financial statements, the quarterly earnings, that kind of thing from a company. Because it's an ETF, it doesn't have that. It's just a conglomerate of a basket. So therefore, RV and RS are always going to be at 1. So when looking at an ETF, your primary focus is RT. At 1.1, that is barely meeting my personal standard of where I like to see a stock. Typically, I like to see it above 1.1. But at 1.1, it meets that criteria. Overall, the stock's favorable, but need to see that RT really continuing to pick up rather than moving sideways or starting to pull back anymore. Let's see, IDT. IDT, there we go. So IDT has great long-term potential, less risk associated with it. You're in a steady short-term uptrend. Overall, the stock's still favorable. BEN. Good long-term potential, about average risk associated with it. You're in a slight uptrend, basically flat on a short-term basis. Overall, it's a good stock. I'd keep an eye on the RT though. GME. All right, we'll do GME. So GME, poor long-term potential, about average risk involved with this stock. Timing after earnings, it is pulling back a little bit. So timing is below the level of 1. It is in a slight decline currently. Overall, the stock's not favorable. If you want to see my personal insights, make sure to follow me on Twitter. I posted a lot of stuff. I post a lot of stuff about GameStop on a regular basis over there. It's one of my favorite stocks. If anybody hasn't seen it, I do a lot of videos over on our YouTube channel about GameStop. It's one of the most fascinating stories, if you will, and ever since the 2008 crash, on what's going on in the background with that. So I like the stock personally. And if you want to know my insights or want to see more about it, make sure to follow me over on our Twitter or over on my Twitter. PRFrance88 is my Twitter handle for anybody who wants to do that. PR. So Paul Romeo France, my last name, 88 is the handle there for you. All right. Let's see. Where was I? UPST. UPST, poor long-term potential, does have a lot of risk involved with it. You're in a really strong short-term uptrend, so overall the stock is favorable for you speculative or momentum traders out there. PRFT, great long-term potential, less risk associated with it, really strong short-term uptrend, so overall the stock's definitely going to be favorable here. Oh, looks like I even have an alert on it here. Let's go ahead, delete the alert. There we go. All right, so let's find the next one, AEO. AEO, good long-term potential, about average risk involved with this stock. However, you're in a steady decline. Overall, good stock, not the right time to be in. When's my birthday? February 1st. Let's go ahead and take a look at the next one here, AQST. So I see a lot of people commenting about AQST over on our YouTube channel, asking us to look into it. It's a speculative play. Simple as that. If you're looking for the next short squeeze or the next GameStop, well, first and foremost, I don't think there ever will be the next GameStop, especially after all the regulations that come into place from this, this whole situation that's going on. We'll leave it at that at best. But you could definitely have some short squeezes along the way. But the analysis kind of lines up with that. You're speculating that you can have another squeeze or a pop because of, the low float, heavy short interest, that kind of thing. So this stock has poor long-term potential. You have a lot of risk involved with it. You have a slight uptrend. Overall, the stock is not favorable. For a stock with this much speculation involved, you need to see that RT really a lot higher than where it's currently at. I don't think you have there, Jay. I'm surprised, honestly. Let's go ahead, take a look. ANY. Poor long-term potential, a lot of risk associated with it. Another speculative play looking for that short squeeze potential. You have a really strong short-term uptrend. Not enough, though, to offset it to make the stock favorable still at this time. CMRE. So CMRE, great long-term potential, but does have a lot of risk to get that long-term potential. You're in a really strong short-term uptrend, so overall the stock's favorable for now. Let's see, LAKE. Good long-term potential, but does have a little bit of risk associated with that potential. You're in a steady decline on a short-term basis. The stock's favorable, but not the right time to be long into it. mRNA. There we go. Good, phenomenal long-term potential. Less risk associated with it. You have a strong short-term uptrend. Overall, the stock is definitely favorable. Let's see. QS. QuantumScape. Poor long-term potential. A lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. AMC. Poor long-term potential, a lot of risk associated with it. You're in a slight uptrend right now, but not enough to offset it to make the stock favorable overall. CLVT. Good long-term potential, but does have a lot of risk associated with it. You're in a steady uptrend, so overall the stock's slightly favorable here. PAAS. Great long-term potential. Does have a lot of risk associated with it, though. You're in a steady decline currently. Overall, it's a good stock, but not the right time to be long into it. PFMT. So good long-term potential, but does have some additional risk associated with it. You have a really strong short-term uptrend, so overall, the stock is favorable here. Let's see. Let's get a few of the other ones over here. KMX. So KMX, good long-term potential, less risk associated with it. You're in a steady uptrend. Overall, the stock's definitely favorable. Let's see, HUT, good long-term potential, but does have some risk associated with it. You're in a really strong short-term uptrend currently, so overall, the stock's definitely favorable right now. Extra off. All right, we'll do extra off for you, Jay. Extra off. Poor long-term potential, a lot of risk involved in this stock. This stock is definitely a speculative play. I say it week in and week out. I still like the stock. It is in a steady decline. That's fine. I'll wait till it gets closer to that $2 range. If it hits that $2 range, I'm definitely adding more. Not financial advice, just my personal thoughts on it. Overall, the stock's not favorable currently. Once again, another stock that is heavily shorted, that has some actual potential behind it. So if you guys are looking at a short-term squeeze play or just a squeeze in general, definitely take a look at Extro. Let's see. Is there a reason why we cannot set alerts from positions in the portfolio like we can from the watch list? Jim, I am working with our development team on adding more functionality to the alerts to give you guys more access to that. It is going to require a little bit of time for them to, get that coded in there and make sure everything works right. But rest assured, I have addressed the alerts and want to see more improvements with the alerts. So hopefully that will be coming soon. When, I don't know, but once it's ready to go, you can rest assured we will be talking about it here on Facebook and on our YouTube. Hey, appreciate that, Mark. Thank you for that. Let's get some hashtag VV Nations in the chat over on our YouTube, and some love in the chat. Show Mark some love for that. Thank you, Mark. I appreciate that greatly. All right, so EPAM is the next one coming in. EPAM has great long-term potential. You have less risk associated with this stock. You have a really strong short-term uptrend. Overall, this stock's definitely favorable right now. Let's see. CEI, poor long-term potential, a lot of risk. You're in a steady uptrend on a short-term basis, but not enough to make that risk worthwhile. Therefore, the stock is not favorable. Let's see what else we have. UNH, United Healthcare, good long-term potential, less risk associated with this stock. You're in a steady uptrend, so overall the stock's definitely favorable. CGC, poor long-term potential, a lot of risk associated with this stock. You're in a strong decline. Overall, the stock is not favorable. You know, this is one, Jesse, I've been talking about with the marijuana stocks just in general. Keep an eye on them, you know, going forward with Congress getting ready to be back in session soon. This should be one of the topics that they talk about. They said that it was on their books for 2021. Obviously, we didn't get in the first half, so the only half left is the second half. So, you know, once that starts hitting the news, once you start seeing, you know, the headlines talking about it, you start seeing some uptrend potential, some candlestick patterns, those sorts of things. You know, that would be the time I'd really be looking at taking advantage of the marijuana stocks. All right, let's see. NCLH. Poor long-term potential, a lot of risk. It's in a steady decline. Overall, stock is not favorable. PPE. Wait, I think that's supposed to be PFE. Pfizer. Yeah, there we go. Good long-term potential, less risk associated with this stock. It is in a steady uptrend, but not above that 1.1 threshold we typically prefer to see. It's a good stock, but I'd definitely be keeping an eye on that RT currently. Let's see what else we have. Where was it? We'll come back in. QSR Tim Hortons. Funny story about that. You know, Canada is one of our second biggest market here at VectorVest that we cover. And I remember one of the first years I was working here, didn't know anything about the Canadian market, was talking with one of our Canadian subscribers, and they told me, this was back in 2011, I think it was, there's only two things to invest in the Canadian market, and that is gold and Tim Hortons. So I will do that just because of that. I'll never forget that story. But let me finish the rest of these because we are in the US side, and then we'll take a look at the Canadian to do the Tim Hortons there. All right, so SID, let's see. Great long-term potential, but does have a little bit more risk than the average stock out there. You're in a steady decline, so overall the stock is a good stock, but not the right time to be long in it. TNXO, not finding that one there. TNXP, that's why. XP, there we go. Poor long-term potential, a lot of risk associated with it. The stock's falling, free falling essentially. Overall, stock's not favorable. ABR, great long-term potential, less risk associated with this stock. You're in a slight uptrend. Overall, the stock's favorable. At 1.06, honestly though, that's really more of a sideways move, more so than anything else. So therefore, I'd be keeping an eye on, on the RT. Let's see. GRWG, great long-term potential, about average risk associated with this stock. You're in a steady decline. Overall, the stock's about average right now. LAD, there we go. LAD, great long-term potential, less risk associated with it. However, the timing is just not there at 0.91. You are in a steady decline currently, so therefore it's a great stock, just not the right time to be long in it. Let's see what else we have. You're welcome, Jesse. Always a pleasure. Can you please add the Hall moving average to VV? Not familiar with the Hall moving average, but Raul, what I would recommend, I'm not familiar with that specifically. Send an email to our support@vectorvest.com with some information about Hall moving average. And they can see what we can do with that. Let's see. Making sure I'm all caught up. Yeah. Gotta love it. Gotta love Mark, man. He's been great. Always love having him in the chat. So once again, Mark, appreciate that. Thank you. OPAD. Poor long-term potential, a lot of risk associated with it, but timing. So this is a momentum play, pure and simple. If you're a momentum trader, day trader, yeah, this stock could definitely be a good opportunity. If you're looking for something that doesn't have a lot of risk involved with it or looking to buy and hold, this is definitely not going to be that stock that you're looking for. Let's see. KKR, great long-term potential, less risk associated with it. Timing, it's in a slight uptrend, more flat than anything else. Overall, it's a good stock. I'd be attentive to that RT though. LNG, great long-term potential, less risk associated with it. Timing, once again, timing is the issue. 1.05, it is in a slight uptrend, but more flat than anything else. Overall, it's a good stock, but keep your eye on the RT there. All right, so I see a few Canadian stocks coming in. I will do those. Just give me 1 second. I'll get to those. Let me finish up. I'll do two more on, and then we'll get into the Canadian stocks that you guys want to see there. BTU, poor long-term potential, a lot of risk associated with it. You're in a really strong short-term uptrend. So overall, the stock is favorable for a speculative trade, momentum trade. If that's not your cup of tea, simply stay away. And then SENS, poor long-term potential, a lot of risk associated with it. However, you do have a steady short-term uptrend. Overall, not enough to make the stock favorable, but as I mentioned last week, there was news after the end of the first half of the year. What is it? BlackRock, I believe it was, took a $25 million position in this. And if it's good enough for them, it's good enough for me. I own this stock, so a little biased there. But that's my thoughts on it. Let's see. Coin, COIN. Coin, good long-term potential, but does have a lot of risk associated with it. Basically flat on a short-term basis. Overall, stock's about average. How about a wedge for your fans? All right, let's see if I can find one more. If you brought me a beer. Mark, where are you at, and what kind of beer do you like? I will try to find a wedge for you, Jay. Let me see if I can do that here. First off, let's go switch over to our Canadian market. We do have two people that are looking for that. So getting into the Canadian market, going to the magnifying glass. QSR. I think that was the ticker symbol. Let me make sure I had that right. Where was it? Yeah, QSR Tim Hortons. So good long-term potential, less risk associated with it. You're in a slight uptrend. Personally, not enough for me to really want to jump on board with it right now. Something to keep an eye on. Overall, the stock is favorable nonetheless. And then the other one that we were looking for, where was it? EDV. EDV, you have good long-term potential. You have more risk associated with it though. Steady uptrend. Overall, the stock's definitely favorable. Let's see. Do we have any sort of a wedge pattern here? Let's go back. Not with that one. Let me get back into here. Let me go ahead. Let me find one real quick. I know I can find one for you guys. You know what? We're going to do this way. We're going to go here. Pull up that. Here is, let's zoom in. Here is your wedge, Jay, right here. GME always has a reliable wedge candidate here. So you have your lower highs. Oh. You have your lower highs here, here, here. And you have your higher lows here, here, here. There you go. So glad I can get one in for you guys. On that note, let's go ahead and take a look at what's going on in the market before we wrap up for the day. Looking at the market, we're still 3 ticks into the yellow. The market is still neutral, and VectorVest does not advocate buying any stocks at this time. If we scroll down, we can see the RT is actually falling down a little bit from where we last looked at it. Buy to sell ratio pulling back a little bit more. MTI also pulling back. Still remain that down up situation. Looking at the advances and declines. Advances have been selling off a little bit more. Decline has been picking up a little bit more. So we have seen a softening in the market over the last hour. And as we scroll down, the Dow is now up basically flat for the day. NASDAQ's up about 0.2%. S&P is basically flat. VectorVest Composite up about 0.3 for the session so far. So we saw that this morning. Our guidance was, simply sit on your hands, be patient, wait for a better buying opportunity. Today is not the day to be buying. And we're seeing exactly why now. We're seeing even more confirmation of that. Looking at the quick little mini graphs down here at the bottom, you can see that we have experienced a sell-off on all the major indices over the last 15, 30 minutes or so. So therefore, best advice for right now, sit on your hands, be patient, wait for a better opportunity to come to you. Don't go chasing it. As always, that helps remove your emotions out of your trading and focusing on more of a systematic approach to your trading as well. So once again, thank you all for tuning in here today. Thank you once again to Frank for the stars over on our Facebook page. Also to Mark on our YouTube page. Thank you guys for all your support. If you guys haven't already, if you've enjoyed today's stream, don't forget, as always, smash that like button, subscribe if you're not already subscribed. And with that, have a great weekend. Be safe out there. Take care. And make sure to be here at 11 a.m. Eastern next Thursday as we kick off our next stream, both on Facebook and our YouTube channel. So until next time, take care. Adios. See you guys later.